You hear people talk about playing the stock market all the time, right? But what does that actually mean? Well, it turns out there are two main ways people approach it, and really getting the difference is key to understanding everything else. So let's dive in. Okay, so just to quickly bring everyone up to speed, in our last explainer, we learned that a share of stock is basically just a tiny slice of ownership in a company. And this is the really important part. We know the value of that ownership isn't set in stone. The prices for these shares are constantly moving up and down, which, creates all the action.
Which, of course, leads us to the big question. With all these prices bouncing around, how do people actually jump into this market and try to make money?
Okay, let's get into it. The answer pretty much boils down to two very different mindsets, two totally different ways of looking at things, the way of the investor and the way of the trader. First up, let's talk about the investor. Their whole philosophy, their whole world is really centered around this idea of long-term ownership.
So what does it really mean to invest? At its heart, it's about buying into a company's story. You believe in what they're doing, you believe in their future, and you want to own a piece of that success for the long haul.
And this is where you really see that mindset in action. An investor is focused on the actual business. Its health, its products, its leadership. We're not talking about a time frame of days or weeks here. We're talking about years, maybe even decades. That analogy is just perfect. You're planting a tree. You don't go check on it every 5 minutes for apples, right? You plant it, you nurture it, you trust the process, and you wait for it to mature and bear fruit over time. All right, now let's do a complete 180 and look at a totally different approach, the world of the trader. If the investor is a patient gardener, the trader is way more like a merchant in a bustling, fast-moving market. With trading, the mindset just completely shifts. It's less about the long-term health of the company and all about the short-term dance of its stock price. The goal here is to profit from all those little wiggles on the price chart, which means getting in and out of positions much, much more quickly. And this just illustrates the difference perfectly. A trader's goal is to capitalize on that price movement we talked about. Their focus isn't necessarily on the company's 10-year plan, but on the stock's price chart today. Their time frame is much shorter. Days, weeks, maybe a few months. The merchant analogy is spot on. They buy goods not to use them, but to sell them quickly at a higher price to make a profit from the transaction itself. So, let's put these two approaches side by side to make the distinction crystal clear. When you really boil it down, it comes down to a few key areas. This chart really breaks it down, doesn't it? Look at the time horizon. The investor's game is measured in years, betting on the company itself to grow. That's why they buy and hold. The trader's game is measured in days or weeks, betting on the price to move. That's why they buy and sell. It's a fundamental split in both strategy and activity. So here's the crucial point. We're not here to say one is good and one is bad. That's a really common misunderstanding. They are simply different strategies. Think of it like a hammer versus a screwdriver. They are different tools designed for completely different jobs and goals. And that brings us to the most important point for anyone who's just starting out. Before you even think about which tool you might want to use, you have to understand the project you're working on. So, the takeaway for now isn't to pick a side. Don't worry about whether you're an investor or a trader. Your only job is to become a student. You have to learn how to read the map before you even think about choosing a path. And hey, if you're finding this step-by-step journey helpful, make sure to subscribe to NeuralTarot. We're building this foundation of knowledge together, one explainer at a time, and you won't want to miss what's coming up. In our next explainer, we're going to take what we've learned and use it to tackle some of the biggest myths and misunderstandings people have about the stock market. It's going to be a really fun one. I'll see you then.